Hi, good morning. My name is EJK. Welcome to the Critique-spheré. This is a channel where we are going to be talking about. This is a brand new channel. Welcome, welcome, welcome. This is a channel where we're going to be talking about everything really in society. Talking about business, talking about money, talking about government, economy, and we are probably also going to be talking about other little things like maybe relationships, although that's not going to be our fault. So welcome to the Critique-spheré. This is the very first time I decided to, make videos for YouTube. The main goal being to help society come awake. Yeah, because personally I've seen so many things, in society, and a new thing actually is happening. We have a company, the SpaceX, the company listed on the New York Stock Exchange, NASDAQ, and people there's a lot of frenzy about the stock, and some people are alarmed that one person has crossed the billionaire line into trillionaire, and a lot of people really are wondering why one person would have so much money, really. First of all, I think I should just say that to correct the impression a lot of people have, first of all, the man, Elon Musk, does not have $1 trillion sitting in any bank or cash $1 trillion anywhere. So now, that being cleared, he has that value of money in stocks of his companies. So now, how did he get there? How did he become a trillionaire? We're going to start like this. He made that money, he got that value of money. He really hasn't made the money, but he has that value of money from his holdings in his companies, because he listed his company or companies in the stock market. So now, what is the stock market? The stock market generally is referred to as the capital market. For every business, when you start a business, you may use your money to start the business, and you can borrow as well, like from banks. Usually borrowing from banks are not so long term. They are usually could be anywhere from 1 month, 6 months, 1 year. A bank can finance you 10 years. A bank can finance you 30 years. It all depends. An example is the mortgages that people take that usually span many years, sometimes up to 30 years. So that's one way you can get money to finance your business. Another way you can get money to finance your business is to go to the stock market, which is a capital market. The stock market means the capital market. It is a market, it is a place where businesses can get money that they need without a term. As they can get money that they need, business people can get money that they need to fund their business without any term limits. So, people, all of us, we all have the opportunity to go to buy stocks of companies when the companies come to list at the exchange. Now, let me bring it down to Elon Musk, SpaceX, and use that as the key example to bring understanding to our people. So, When you take your company to the stock market, you don't just do that. You need investment banks and all those, financial companies. They are the ones who prepare the process and then, go to the stock market on your behalf, apply to list your stock in the market so that anybody can buy your stock. So buy and sell. When you buy something, you give your money, you get that thing. So the stock that people pay for becomes the person's property. If you buy 10 stocks, 100 stocks, 1 million stocks, whatever number of stocks you buy from a company at the stock market, that particular stock becomes yours, and your money goes to whoever owns that company, because that money is buying their stock. So that money is put into the company, right? So now the company will take all that money and run their business, while you become a part owner of the company because you own their stock. And then when the company declares profit, whenever they declare profit, that profit is divided to the number of stocks. Let's say a company declares $1 million as their profit, and they decided that they want to share that $1 million among the shareholders. If the entire stocks that is available that represent the entire value of the company is 1 million, and they decide that they want to share the 1 million to all their investors. They are called investors. If you buy stock of a company, you have become an investor in that company. So if they declare a profit of like $1 million, and the number of stocks used to calibrate to say, okay, this is the total value of the company, that number of stocks, if it is, let's just say, up to 1 million, and they declared a profit of $1 million, so it means that each one share of the 1 million shares in the company will get $1 as its dividend, right? So now, as you have bought the stock, your money goes into the company, right? So now what happened with Elon Musk is, remember, Elon Musk created many companies. He started with, he created a couple of companies, from PayPal to Tesla to, SpaceX, to so many businesses he has created, and he has succeeded in these businesses, right? So now, when he decided to bring SpaceX into the market, mind you, SpaceX is a company that he has been financing, that has been, working, right? So it is not as if people came to give Elon Musk $1 trillion. What he needed for his company, he wanted people to be part owners in the company, right? And from the value of the company and, everything, all the indices put together, in terms of assets and goodwill, this is how a company is valued. So they came up that the company needs, we're not going to be talking about the man himself for the most part, we're going to be talking about the company, the business. So he came up with a proposition that his company would like to generate $77 billion for their operations. So now they went through the process of listing the company in the capital market. It is people like me and you that bought shares in that company to get to that amount of $77 billion, which will go to the company. That will become money that the company will begin to use to operate their business, right? That is in the initial public offering. So now the company raised $77 billion. But then the capital market has the part where when you give your money to a company and you become a part owner of the company, you become a shareholder, the company has taken your money. That is not a borrowing. That your money in the company has no time or term limit. So that money is going to stay in the company forever. But you, as an investor who bought shares in that company, you can decide next year. For example, this is June of 2026. You, as someone who bought shares in that company in the initial public offering, that is we call it a primary market activity. That is the first time that company came to the market. But now the stock market is a secondary market as well, much as it is a place for the primary listing of the stock. The first time the companies come to the market to sell their stock to people, investors, me and you, it also has an angle inside it, which is called the secondary market, so that investors can as well trade their shares. So let us assume that you have taken $10,000 from your bank and you have bought the shares of what's it called? SpaceX. And after 1 year, let's say in July of 2027, you don't want the stock anymore. You want your money back. Let us, for easy understanding, let us say the same price that you bought the stock in 2026, that is the same price that the stock is in 2027. For the most part, when a company makes profit, the price of the stock will go up. I'll explain that. So now, if you get tired and say you don't want to be an owner of this stock anymore, so you as well in the stock market can sell your shares, meaning that the money you invested in that company is still in the company. That particular money is not coming back to you because it is not a borrowing, it is a part ownership that you have. But now you can sell that your ownership to someone else. That is the stock market for you. The stock market is the platform on which anybody can sell their shares. I don't want my money to be in this company anymore. For whatever reason, I need my money back. You are not going to go to Elon Musk or go to SpaceX or any company for that matter that you bought their shares and say they should give you your money back. No, you go to the stock market, which of course really is in our palms today. We have a lot of companies and trading platforms like Weibo, like what's it called? There are so many of them. There's Robinhood. There are so many, financial institutions, that have apps that you can download on your phone. You register, you link your account, and you can buy and trade stocks like right in your palms today. So now, when you use that app or you go to the stock market and you sell your shares, somebody else buys your shares. That ownership you are relinquishing, somebody else is going to take it up. And that person is going to pay the value of that stock, and then you get your money back. So now also, but for the most part, a successful company that you bought last year for, let's just say, $135, as people bought SpaceX for $135, the prospects of the business and the goodwill that the business has, and the potential for profit that it holds, because it is more or less a new company, can make the value of shares. What people are now buying is the value. And mind you, there is this factor in the market generally, any market for anything. If demand is high, demand being high means a lot of money are chasing limited products, limited goods, limited stocks. Because I'll be using little examples to help people understand. If 10 people want to buy a stock and the price is, let's say, $135 per stock, 10 people want to buy it, they can buy it at that amount. But if 100 people want to buy that same stock, just like anything else, if you have plantains, if you have anything you can think of, if you have cars, like during the pandemic when cars were not being produced because there was a lack of chips, the demand for cars became costlier because a lot of people were still trying to buy cars, but more cars are not being produced. So it becomes a competition of who has the more money, who has the bigger money. If you have plantain, for example, and 10 people were standing in front of you to buy your 10 pieces of plantain, and you wanted to sell those plantains for, let's just say, $1 each. So now you look up and you see 500 people lined up trying to buy that same 10 plantain. You will not want to sell that plantain for $1 anymore, because now you have a lot of people who want to buy it. So the fact that a lot of people want to buy it, you can increase the price. Unfortunately, that's how market works. Free market, where you can determine price really by competition that you see. So if 100 people now want to buy those same 10 plantains, 100 people have lined up, or 500 people have lined up looking for those same 10 plantains, there will be no reason for you to sell one plantain for $1 anymore. Now you can sell it for $2. Maybe out of the 500 people, it may be 300 people that is willing to pay $2 for a plantain that they see is actually $1. Now you have 300 people trying to buy 10 plantains. They are willing to pay $2. But you cannot sell 10 plantains to 300 people. You can as well say, okay, my plantain now, I'll sell it for $5. Among the 300 people, you may have 250 people who are willing to pay $5 for that same plantain, which was $1 2 minutes ago. So now you have 150 people who are willing to pay $5. That same plantain, you cannot sell 10 plantains to 150 people. You can only sell your plantains to at least 10, at the most 10 people. That's each person getting one. But as well, the plantains can be bought by one person. All of them can be bought by one person. So now you have 150 people trying to buy 10 plantains. Because those plantains are in high demand, that one plantain can as well sell for $50 in a minute. It all depends on who is willing to pay. There is no force. That is the beauty of a fair, I'm going to call it of a market system. I'm not going to say of a fair market system, so I'm going to say of a market system. Because a market system means the stuff is going to go to who is willing to pay the highest price. Because you as the seller, you want to get as much money as you can from your goods or your product or your service or your stock. So Elon Musk SpaceX wanted $77 billion from the stock market as money that they need to finance their business. But now, me and you, everyday normal people, because mind you, nobody is giving Elon Musk free money. We are all selfish when it comes to business, because that's the brain of business. The business of business is look out for yourself, So now, a lot of people, all of us, we remember when Tesla came out, when Tesla was nothing and it later succeeded. We know the Boring Company, we know a lot of things Elon Musk has done. So now people want to participate in the results they believe that he will get. So it is because people want to participate in that result. Mind you, people want to succeed in their life. You want to succeed in your life. Where will you put your money? You will put your money where you will get rewards or profit or returns, whatever you choose to call it. So now there are so many companies you can buy their shares, but you didn't go to buy those shares. You went to buy Elon Musk shares at $135. What's the reason? The fundamental reason is because you believe that the stock, because of the man running it and his records that you believe that the company is going to succeed. So that is why you are willing to pay $135 per share. Even if that stock price, as it is listed now, if the company comes up with good news or contracts or whatever, and the value of the stock goes up, right? Let me tell you something. The $77 billion that the company raised is not, that is, let's just say it's in the bank account of the company. That money is not going to increase, right? What the company has is that $77 billion. But now, when the company begins to bring out good news in its quarterly reports and every other news that may come out of the company, investors, me and you, we become willing, because we want to participate in the future profit. We become willing to buy that stock that was sold initially for $135. That stock, me and you become now willing to pay $500 for it. And now there are some other people who will come later who will be willing to still buy the stocks from the people who bought it for $500. So it is value that is being traded.